One thing that we have talked about, in fact, we talked about it on this very program yesterday because the show is called Worldwide Exchange, is that the European markets are really heating up. Vaccination rates up, case counts down. Do you guys, in principle, think that maybe globally Europe and or Asia are better bets for stocks than the U.S. markets?
Hey, thanks for having me on. In terms of how we consider so I'm hearing a bit of an echo. In terms of how we think about the US and Europe, Europe has been doing particularly well. As you said, the reopening trade is back on. We can see case numbers are down. And actually, this is a better result than I think many analysts were expecting. So what we're anticipating is that reopening trade produces a bit of a pop in economic growth during the summer months, and that will be good for equity markets. But what we're doing is essentially we're trading that vaccine curve, moving up, moving along as the countries that do better on the vaccine side. So after Europe, we'd actually think emerging markets are going to do well. But through all of this, even then, we do think US equity markets are still a good place, a more stable place to be hiding out.
We have so many baby boomers in America. Seema, a lot of people that are either retired or retiring. The pandemic maybe has accelerated retirement. Point is, we've always heard for so long about this 60-40, portfolio, 60% stocks, 40% bonds, make a little money, protect your assets. I mean, bonds have done nothing forever, Seema. Is the 60-40 portfolio dead? And if so, should it be what? I mean, 90-10? What's the right makeup for our audience?
No, we don't think the 60-40 is dead. And actually, even if we look over the last decade, that mix has really been a very stable one. If you're looking, if you're worried about the economic outlook, really that bond side of it, the treasuries, the mortgages are the place to hide out. But increasingly, there is no denial that the fixed income environment is really challenging right now. So instead, you need to rethink that part of the 40 mix. And increasingly, we're thinking that, look, you need to go up into the more emerging market debt. Think about high yield, think about preferred securities, think about private real estate. These are the areas where you're going to get a bit of a pickup and then offset that with still some of that stability from US treasuries and mortgages.
What's so weird, Seema, is that we're talking all the time about inflation. I mean, the numbers are there. I mean, I don't know what it's like over there, but over here, everything is more expensive. I mean, every commodity in the world is up in price. And yet, bond yields have done nothing, if not moved down the last 2 months. I know they popped in late last year, but is the bond market sending a very different message than we keep hearing otherwise?
Yeah, it has been a really interesting development because as we came into 2021, a general view for the whole market was that we were going to see bond yields higher this year because of economic growth and rising inflationary pressures. And that did happen for the first quarter. But what we've seen now is that it feels like economic growth in the US is hitting its peak. So you're hitting that peak acceleration. And if anything, we're seeing a couple of growth disappointments. And then on top of that, the rise in inflation that we've seen is really down to transitory factors, or at least factors that should be transitory. And then the third thing is that the Fed speakers have been out in force, really emphasizing their patience. So that together, I think, is suppressing any of that potential rise in bond yields. But look, for investors, this is the one thing to remember, is that the Fed at some point will need to unwind their pandemic emergency programs. At some point, tapering will come in. And once they start talking about it a lot, that's when you're going to start to see that upward movement returning to the bond market.
Shepard Smith here. Thanks for watching CNBC on YouTube.